Good morning and welcome to Real Vision and Ledger's Festival of Learning, the next digital asset wave. I'm Ash Bennington. I'm very pleased to be joined today by Pascal Gauthier, Chairman and CEO of Ledger, for a fireside chat. Pascal, welcome.
Thank you. Thank you for having me.
Well, it's great to be here with you. Listen, Pascal, I'm always fascinated by people's journey into crypto. Tell us a little bit of your backstory. Where were you when you first heard about crypto? What were you doing? And how did you get hooked?
Yeah, so my previous career was in online advertising. And in 2013, we listed a company named Crypto at the NASDAQ for around $2 billion. And in 2014, I was with Index Ventures as an entrepreneur at residence. I was no longer working at Crypto, and I was sort of looking for my next venture. And the word Bitcoin started to pop out. I didn't really understand it at the beginning. It was the moment where we would Uber everything. But Bitcoin kept on popping out, and one day I met with Wences Cesares at Zappo. And he explained Bitcoin in sort of 5 minutes in a way that I could understand. And Wences is probably one of the people in the space that brought the most people in to join this adventure. And this is sort of meeting with Wences that I decided that Bitcoin and crypto will be my future.
Yeah. Wences was one of the Johnny Appleseeds of the crypto space. I remember speaking to him relatively early on myself. Listen, let me ask you this. We've been talking about throughout this conversation on Real Vision, the adoption cycle, where we are right now. Where do you see it? What's your take on where we currently are and where we're headed in terms of mass adoption of digital assets, cryptocurrency?
So first, I think we have to understand what the market is. And for us at Ledger, the market is self-custody. Like, if not self-custody, then why crypto?
Right.
But today, when you look at the number of users that have crypto, you read numbers like roughly 500 million, which would seem to indicate that we are pretty, really far in the cycle. But I think these numbers have to be taken with a pinch of salt. There might be around 500 million people that have a Bitcoin, part of a Bitcoin, Ethereum, other coins. But the vast majority of these users are in custody with an exchange,
right,
all over the planet. And we ran numbers on self-custody recently with my business intelligence team. And when you look at Ethereum, it seems that you only have like 107 million addresses, around that, like 107 million addresses, of which 100 million addresses have less than $160. 80 million have less than $16, 80 out of the 100. 20 million has got between 16 and 160. So basically, it's that 7 million users with more than $160, and this is where the market of Ledger is. And so the market of self-custody is still, fairly small in a way. And so I think in terms of the adoption cycle, that makes us still, very early in the adoption cycle, because it seems to us that if users don't actually even like sort of partially own their digital assets, and they don't sort of use them to do things in the real world, like payments, like peer-to-peer transfer, et cetera, engaging with DeFi, NFTs, like arts, et cetera, then public blockchains aren't really yet to the level where they should be in terms of being public blockchains and having sort of retail connecting to them. And we think that's very normal. Like, we're very early in the cycle. Most UX UIs could do better, including Ledger. This is something where we're spending a lot of money on, to just make the user experience a lot better and to sort of catch up with Web 2, if you will. You have Web 2 experiences that are very slick, and when you go to Web 3, usually it's more complicated. Not just Ledger, just like everything Web 3 is more complicated from a UX UI experience. So you can really see that you're at the beginning of the cycle.
Well, I think that's absolutely spot on and well said. Look, we're here in the middle of the Sam Bankman-Fried trial down in downtown Manhattan. Obviously, the weaknesses, the risks of keeping coins on exchanges is something that's well known. And in a sense, it's kind of the worst of all possible worlds, holding coins on exchanges, because you don't have the true accessibility to the underlying network yourself, and you're in a system that's far less regulated in terms of the security of those deposits, of those accounts. But you bring up this point, which I think is such an important one, the idea of the user experience, user interface aspect of it. It's so interesting to see as the space begins to develop. Obviously, we've got a lot of folks with programming backgrounds, with really intense tech backgrounds, who are comfortable with an interface that may not be something that's super user friendly. Maybe they spend their own time at the command line in their own computer, and they're very comfortable with that. But when you're talking about bringing on, say, the next million users, the next 100 million users, I think you're just spot on about the idea that you've got to have a user interface that looks and feels like something that people are used to with Web 2. Talk a little bit about how you think about that at Ledger and how you guys are moving forward to implement that for the next 100 million users.
So it's very complex because the market has to move from a pure technology market designed by engineers to a product market
Right.
designed by sort of product managers. It's hard sometimes to understand, but like the majority of users don't care about the technology, don't want to know about the technology, don't understand the technology. Most people don't really understand what internet is in terms of a protocol. Like, nobody understands the way internet works, but everybody uses the internet just because it makes your life easier. So I think the focus
Right.
for crypto is, okay, so how do we make people's life easier? Like, you pay faster with less fees, money transfer, etc. Like, there are a lot of good things that come with crypto. But in terms of changing your approach at a company level, and so what Ledger is trying to do, I think, can be said for every other company in the space. Like, to change from being like a technology company to become a product company is a deep change that needs to happen. And every company starts by being a technology company, especially in this space of sort of blockchain technology, etc. Like, it has to be that way. It's like, it's the developers that are the core of this industry. But how do you switch? But there needs to be a natural switch towards products. So every company needs to think for themselves how to do this. But for us, our mission is security and ease of use. And UX UI is in the ease of use, of course, but security for us is the start of everything, because if you are to be in self-custody, and again, if no self-custody, then why crypto? Then it needs to be very secure. And this is something that needs to be redefined, because your phone or your computer weren't designed to be this secure. And because
Right.
for a long time, they were not supposed to protect cryptographic secrets. They were not supposed to protect Bitcoin and other cryptocurrencies' private keys where transactions are immutable. And so what you would do is you would find like problem in the operating system, and then you would patch it later. And this is why you get a market called the zero-day exploit market, where you can actually buy exploits into different operating systems and enter into phones and computer and actually hack them and steal from them. And so security has to be completely redefined, because I think everybody listening to this understand that with crypto assets, like, once you can't have it slightly open, because once the private keys are taken from you, your money is gone. And so it's a 1 or 0 type of situation. So now our challenge is like, how do you redefine security but with ease of use? Because usually these are two concepts that don't go hand in hand together. Security makes it usually much harder to use a product. And so this is what we're working on. Stacks is our next retail product that will come out in market, we hope soon. We're having difficulties with the screen. We publicly announced it to our users, and we're working in full transparency and as hard and as quickly as we can to bring the product to market. And Ledger Recover. These are the two products that we're bringing to market, and they're going to solve for 2 pain points. One is the onboarding. It's very difficult to onboard into self-custody today. And the onboarding is critical. This is the first time that you touch a product. So for the next 100 million users to join the space, and right now, remember that there are only 7, and as far as we're concerned in terms of like who has real money in this game. But for the next 100 million users, they're going to come in the space with more than $160. They need like an easier onboarding. And so this is what Stacks does. It's just much easier and much faster to understand and to onboard into self-custody. And then you need to solve for that.
We should probably tell folks who may not know what Stacks is. Stacks is your next generation hardware wallet. Essentially, it looks like a very small phone with a very sort of large screen. And the idea is to obviously make ease of use and the experience much more friendly to users.
Correct. Thank you, Ash. Thank you for backing me up on this. Yes, correct. So you are 100% right, and I second everything that you just said. So once you solve that problem, then you need to solve the problem in 24 words. It's ludicrous to think that hundreds of millions of users will join the space and hold their private keys and keep the 24 words on a piece of paper or on a plate of metal, etc. It is going to be valid for a subset of users for sure. Like there's a lot of users that do this today. They know how to do it. This is their preferred choice. But there needs to be something for the average user that doesn't want to deal with 24 words and that needs convenience. And so Ledger Recover is a seed recovery mechanism that helps you encrypt and shard your private keys into 3 pieces. And the product is soon to be launched, and that helps you recover your 24 words when you lost access to your funds, basically. And so with the ease of use in terms of onboarding and the seed recovery mechanism, we feel that we're solving 2 of the biggest pain points of the self-custody industry right now.
Yeah. Pascal, let me ask you this to switch gears here a little bit. How much of a factor right now, as you see it, is the larger macro picture affecting crypto trends? I mean, obviously, there's a lot happening in the world right now, geopolitics, liquidity. How do you think about that? How do you conceptualize it? How do you get your head around all the cyclical factors in addition to the broader structural context that you just enumerated?
That's a great question. It's the first time that I got a job where every time I switch on the news on TV, like every piece of news impacts our business. I've never been in a business like this before. Like most businesses, switch on the TV, whatever happened in the world, you're like, well, that doesn't impact me, etc. In crypto and for Ledger, we are impacted every time that something major happens in the world. So the macro economy and the way that the world works has a direct impact on crypto every time. And right now, the macroeconomy isn't really good, as we all know. And so sometimes we talk about crypto as crypto was this, phenomenon on the side that had this, its own life, but it's part of it's part of a whole, if you like. And so, if macroeconomics are as bad as they are today, or tough, it makes it very difficult for crypto. There are, of course, a few things that have happened to crypto and crypto only. I mean, I think the space is still recovering from the FTX incident. And when I say recovering, I'm not necessarily saying like in a bad way, like in many positive ways as well. Like, there are many things that are happening in the space where institutional money is coming in for sure. So, nobody has been discouraged by FTX, and everybody understands the FTX episode for what it really is. So it says nothing about crypto, and everybody is still very bullish on Bitcoin, especially now some of the largest financial institutions in the US and in the world. And so you can really feel that this is coming. But as this is coming, again, infrastructure needs to be redefined because all these guys are coming with a lot of money, and so they have a lot of ask when it comes to security, governance, etc. And these are different animals. Like these are companies that have been working in highly regulated markets. So when they come to crypto, they want to make sure that everything is similar to what they know before. The good news is that you have good companies in the space. You have Fireblocks that is doing a good job. Ledger Enterprise is also doing a really good job, and we've launched our network, Ledger TradeLink.
Tell us about Ledger Enterprise for those who may not know.
Yeah, so Ledger is a retail company first, and so we have a retail product and the hardware wallets that most people know. What people sometimes don't know is that we use the similar kind of technology to design security for larger enterprise, so exchanges, banks, custodians, etc., etc. And with that technology now, you have several features that have been integrated. You can manage your NFTs, you can manage your smart contracts, you have staking natively integrated, and you have TradeLink as a trading network. And what trading does, which is interesting, trading does actually what the market is asking right now, which is institutional money don't want to leave the money on exchange. And so they want to be able to trade from regulated custodians. And so that's what TradeLink enables in a nutshell. Right. And so we know that a lot of money is coming in because we're having a lot of discussions around TradeLink. And so a lot of money is moving into the space. So now the question is, when is the next bull run going to trigger? We don't really gamble on these kind of things, but there are many things that are happening right now where you can feel that the space is still suffering from previous injuries, but actually, we are rebuilding something that will have, a 10x magnitude compared to what was previously.
Yeah. And by the way, when you talk about the segregation between exchanges and registered custodians, this is something that already happens in the non-digital asset space and capital markets. These are structured so that they are regulated to be segregated and therefore to have a kind of fire break between them. But because of the nature of the digital asset space, these are functions that are not separated. The technology, of course, has the potential to do that. When you talk a little bit about the institutional space, what are your feelings about what some of the opportunities are there when you look at that institutional market, when you look at what's happening, what the needs are? How do you see that developing? What are the opportunities? What are the risks?
You mean the opportunities for crypto?
Yeah, in the institutional space specifically.
Well, I think that Bitcoin and cryptocurrencies have done extremely well, in the past, since 2008. I mean, these are open source protocols. In the history of technology, you don't have many open source protocols that have grown so quickly and got around them so many developers and so much money, etc., in a very short period of time. Bitcoin became a thing in what, 15 years? Do I mark 2008 to now? But anyways, I'm a little tired recently. But anyway, so it's actually already quite big. But if you look at the market cap of all cryptocurrencies, it's still around 1 trillion, which is 10% of what gold is, and it's a small percentage of sort of like
right.
Everything else, stock market, etc. So even from a pure numbers game perspective, you can see that cryptocurrencies is still relatively small. And has a lot of room to grow. So I think the main impact that I see with institutional money coming in is just like the magnitude of money that is coming in is very different from what the space I've seen before. And it's not very difficult to imagine. Again, gold is a 10 trillion market, and so right now cryptocurrencies are still relatively small compared to other assets. They're performing better. It's the asset that performs better again this year in 2023. Bitcoin is still the best performing assets compared to every other assets that you can invest in. So it's very attractive for investors, and I think those big investors are coming in because they see an opportunity. And the narrative around Bitcoin has really changed. I think this year or maybe the year before, but like you can really see that Bitcoin has gone to, oh well, it's a network for sort of drug dealers and criminals, basically, to, well, actually now BlackRock wants to launch an ETF on Bitcoin, and so Bitcoin suddenly it's cool. You can really see like everything that you said about Bitcoin in the press now is actually pretty positive versus 2 or 3 years ago it was mainly negative. So I think even in terms of perception and ideas that people have around the technology, I think we've seen a shift in the past year, and that shift comes with a lot of money. I think what's going to be different in the years to come is the kind of money that's going to be invested in Bitcoin is going to be very different from the one that was invested in the past, and the type of players will be also very different.
Yeah, I'm glad you mentioned the spot Bitcoin ETF. I'm curious, at Ledger, how do you think about that? Do you see that as an inflection point in the industry, or is there something else that you're waiting for in terms of adoption?
Well, I've been in the space since 2014, and almost since 2014, I've heard that the next bull run will be triggered by institutional money finally coming in. And it reminds me of my advertising years where it was always supposed to be the year of the mobile, the year of mobile advertising. So every year it was supposed to be the year of mobile advertising, and it never happened. It happened in 2008 with iPhone, actually. So that was the real year of mobile advertising. It was 2008 iPhone. And actually that was a year of internet on mobile, really. Not that it didn't existed before, but iPhone just did it so much better than anybody else.
Right.
And I think it's the same here. It's when are we going to see the year of sort of financial institutions, big financial institutions, finally coming in and changing the game, and triggering maybe the next bull run that would then bring the next retail wave. It's possible that it's the scenario that is playing out right now, because every news that you see, everybody is pretty sort of open and transparent to what they're going to do. And so every news that you see is real. So it's not really a question of if now, it's more a question of when. And the companies that have, announced ETFs, they're the biggest companies in the world. They're very persistent. They know what they're doing. So yeah, I think it might be the year of finally the year where institutional money hits cryptocurrencies and hits Bitcoin.
Let me ask you this. You mentioned this idea of product rather than technology. You have a background in the advertising business. You mentioned iPhone. As you say, that was really kind of the key inflection point where mobile became something that wasn't just a good idea, but it was user-friendly. And it was something that people physically felt attached to their devices, the passion that people had for their early iPhones and continue to have for their smartphones into 2023. What are some of the guiding principles that you think about from a user interface experience, a user experience perspective at Ledger to try and make this an ecosystem that has a physical connection to a user base, perhaps similar to iPhone?
Oh, that's correct. We didn't mention that Ledger Stacks, we co-designed the product with Tony Fadell, who was the inventor of the iPod and co-inventor of the iPhone. So when you're a consumer electronic hardware company, the playbook is Apple. So you don't need to reinvent the game. You can try to be special, and we're trying to be special in the way that we do security. This is where Ledger is probably the best company in the world right now when it comes to crypto asset security and security around critical digital assets in general. But in terms of consumer electronics go to market, how do you think about a product, how do you design a product, etc. Apple is the ultimate playbook, and they've been outperforming the market ever since they launched the iPhone with more iconic products that they brought to the market. They sell 160 million AirPods a year, 45 million Apple Watches a year, 250 million iPhones a year. So the way that they do it is really the playbook. And maybe to repeat myself from what I said before, it seems an easy enough mental trick to go from technology to product, but it's actually very, very difficult and very challenging for a company to do that, because you need to have an extremely strong product team, which is a real challenge in a market that was, again, designed by great engineers, and to bring a great product team on top of that, to have a good discussion with the engineers and to come up with a product, but lead with product. And so therefore, sort of force technology into delivering a user experience, that's the deal. And so the way that we think about the future is, first of all, we think that every web revolution is hardware-led. Well, we don't think it's the case. Again, iPhone was Web 2, PC was Web 1. Software might be eating the world, but you always need hardware to connect to software. You have a mic, you connect it to computer, I got a computer. All of this is hardware. And so an experience in consumer electronics is actually a combination of hardware, operating system, and a software layer. And the software layer is the connectivity part. And so the way that we think about the problem is exactly that. We got secure hardware, we got a secure operating system that is proprietary to Ledger. And then we build a software layer on top to help with connectivity. And we secure you, whether you do nothing with your coins or you interact with your coins. So that connectivity layer, of course, is as secure as what people refer to cold storage, which basically means when your coins are on your ledger and you don't touch them. And you should have the same security, whatever you do with your coins. It's not because you start to move your coins that suddenly you have to take a risk. No, it's the same security across the board. And we build everything into a very secure ecosystem and experience. So that's what Ledger does. So never compromising on security and always improving connectivity and user experience, basically.
Let me ask you this, because I find this just absolutely fascinating. You mentioned that Apple is the gold standard in this space. Of course, I've got, mine not terribly far from me at all times. What are some of those principles that you think Apple has used to such great success, and how do you implement them here in the cryptocurrency ecosystem, which is obviously a little bit different from where we are right now with mobile?
Well, I'm not sure I can list everything that Apple did great, but there is one thing when you develop a product is to when you develop a product, first of all, it's not just the product itself. Like, you don't think just like, well, it's going to be a piece of hardware and it's going to be like this, like that, etc. You think about the product and the experience as a whole. Like, the product is going to look like this. Distribution channels are going to be this. Like, the box is going to be like this. Can the box fit into a mailbox? Yes, etc. You have to think about every aspect of the life cycle of a product. That's number one, and that's usually what companies do wrong. Usually companies think about features, they don't think about product, and so they don't think about the beginning of the end of the experience, the go to market, etc. So that's the first thing. The second thing is, when you design a product, you have to think about the less tangible from a business standpoint, desirability of the product. I think what Apple did great is everybody wanted an iPhone because it just looks great, and it means that you're part of a club. Apple is the consumer electronic company that is the closest to actually luxury goods.
Right.
Are you part of what team are you part of? Are you team Apple or are you team something else? And if you think about that, the distant second is Samsung. I'm a Samsung user. I love Samsung phones. So I would argue that Samsung has has very good phones. I don't want to upset anyone, but Samsung has very good phones. And then after that, it's very difficult to find a third one. So this capacity of developing an object that is part of culture and that people want just for the object, actually, not even to use it. They want the object. Of course, the object has utility, but they want the design. They want to be part of a club, etc. So that's something else, and that's something that we've been working on a lot with Ledger. And you try to bring your product into culture, and I think this is how you build a brand and how you build desirability of a product. Not just that, also features. Typically, Stacks is a great product because it's got an e-ink curve screen. So what Apple did really well is to always bring sort of innovation to the space. And when you buy a hardware from Apple, you buy a hardware that not many other companies in the world can do, and with very specific features that are very specific to Apple. So this is what we were looking to do with that e-ink curve screen, and why it's so difficult, because it's a world premiere. No one has never done it before. So of course, it's more difficult to do it because no one has never done it. But once you've done it, it's an amazing product. And I don't know if you know, but Stacks comes also with magnets, so you can actually stack them together, and does these little noises that users will be able to, little sounds like the user will be able to discover soon. And so all of this, reminds you of when you were a kid or when you were a younger adult and you have your first piece of hardware. You have all these things, you remember the BlackBerry when you had the little thing on the side where you scroll,
right,
etc. All of these things are sort of part of the gadgets around the product, but that make the product, that make like the signature of the product. So all of these things are things that you do actually work on. Like, it's not just by accident that you do them. It's actually there's actually a thought process around it, and you want that because you want the product to, you want to give the chance for the product to become iconic, basically. And then you work on the UX, UI, etc., like normal stuff, but you want the experience to be as sleek as possible. And when you think about the product, you think about the whole experience from the shipping, unboxing, connecting, using, etc., etc. Like, you don't just try to, and you try to look at it as a whole. You don't try to, you don't break it into pieces, and you do good on piece 1 and 2, but you're terrible on 3 and 4. Doesn't mean that you're always good everywhere all the time. And it's, all of this is a process and it's a journey. So we also learning, and not everything is not perfect, but basically you try to make everything perfect, as in the experience around the product, and not just like a piece of hardware that technically works but doesn't connect to anything, etc. So you worry about the experience, and so hardware, operating system, software.
Yeah, and of course, connectivity from a network perspective, but also connectivity from an emotional user experience perspective. I just find this aspect of it absolutely fascinating, because it's something that, is so different from the technology piece. And I've had a number of conversations with Ian Rogers, your chief experience officer, and you mentioned the idea of luxury brands. Of course, Ian was at LVMH prior to being at Ledger, and so there's so few people, I think, in this space thinking about product in the way that you guys are at Ledger, which I think is just a tremendously interesting perspective that you guys bring to the table based on your experience, the philosophy, and the direction that you're going.
Yeah, it's true. And you're right to mention Ian Rogers, because Ian joined early 21 and had a big impact on the company to help with everything that we're discussing now. Hence his title, Chief Experience Officer, but also his background in sort of luxury goods and music before, etc. And when you've seen that movie of going from technology to product, or of course luxury good is like the ultimate products. These are ultimate product companies, but you need the likes of talent like Ian Rogers to build companies like this. But it's very hard. Like, if you think about product first, it's very hard. And I think we will succeed in delivering stacks and recover and really great product and experiences in the market, and we will continue on differentiating ourselves from the early markets. There is a controversy in the space, because when you try to innovate, and there was a controversy around the launch of Ledger Recover, for example, because when you try to innovate, of course, you have the early adopters that sometimes get furious at you, because they're like, well, why would you change things? It works perfectly, and you're trying to do something that is different, that we don't necessarily like, etc. But if you try to onboard, the next 100 million, 200 million, if you try to onboard the next big wave of customers, they won't be like your early adopters. Like, they won't have the same standards. They will never do the kind of things that early adopters do. And so what you can see in the market, you start to have now the situation of two groups. And the two groups that we focused on are, the developer group. There are more and more developers in the space, and we try to bring them around Ledger, because Ledger is an open platform where third-party developers can code on top of. And so we're trying to bring them to code their applications on top of Ledger to basically enhance the space in general, to enhance security in the space and enhance Ledger connectivity. And so we're working a lot on developer tools to make sure that the developer community have what they need to code. Also, we have an investment fund, and we invest in early stage companies to also help them, not just with technology, but also sometimes with money for them to go to market. So that's one group. And the other group is the consumer group. And of course, then there is enterprise, but from a retail perspective, the consumer group, and that consumer group, we are focused on the next 100, 200 million customers coming in, because like I said, today, the space is 106 million users. 100 million users have no need for hardware wallets, so 6-7 million users are our core users, and we do a pretty good job at servicing this market. Like we have a very high percentage of users of that group that are using Ledger today. And so we're very focused on delivering an experience that allows to onboard the next 100 million users in those categories, because only then Ledger can become a really big company. And so it is our responsibility to do this to the space, because if Ledger doesn't do it, who will? And what will this user use for their security, for their connectivity, etc. So we have to design better products that are designed for the average users that will be coming in. And so that's our focus right now.
Yeah, and it just speaks to the trade-offs that you were talking about earlier, and how to balance them and how to, I guess, expand that frontier so the trade-offs shrink. The idea of security versus usability, some of the core features that people who are really passionate about this community absolutely demand, while still managing to balance for people who are relatively new to the space, who are coming on and who just don't have the familiarity with the background, the context, and the culture.
Yeah, but again, for me, I'm really trying to cater to, again, developers and consumers, and we have a philosophy at Ledger of freedom. We design products that are open by nature. You can connect them to anything you want, and so we want people to remain free. And we think it's the spirit of cryptocurrencies in general. So at some points we have to accept that we have to make choices, and we have to lead. I understand that some of the choices might be less popular than others, but then it's for people to make the decisions. I've got it's a funny story. I was at Bitcoin Miami the other day, and I got booed. I was on stage and I got booed by one guy. He booed me. And I was like, why? It sounded crazy to me. It's like, why are you booing me? Crazy. And he was friendly, actually. He was booing me, but he was like more like troll than anything else. And he was like, well, because you still don't have like a Bitcoin only device. And I was sitting next to a guy that is actually building Bitcoin only devices. I'm like, it's okay, buy a device from him. Like, why do you want me to do it? We haven't done this since the inception of Ledger. It has never been a philosophy we've always developed for all ecosystems. We're very clear about this. So if you want a Bitcoin only device, we can only tell you to only use Bitcoin with your Ledger device, which works perfectly well, and that's fine. And don't touch anything else, and you're good. Or if you don't like the way we do things, there are other people that are developing Bitcoin only devices, and their devices are perfectly fine, and you should use them. So there is enough space for everyone to grow in this industry. And again, I don't think the battles are behind us. I think the battles are ahead of us. What's coming is much bigger than what is or what was. And so we have to prepare our companies to be part of the future and not get stuck in the past.
Well, in that sense, in the embracing of openness, you're ahead of Apple. It took them a while to get that message sorted out. Pascal, let me ask you this. Obviously, everybody who's been in this space for a while has lived through a few different crypto winters. I guess I've been through 2, 3, or 4 of them, depending upon how you're counting. What keeps you excited about this space? What keeps you engaged with the potential of crypto during periods of price downturns?
Well, look, for me, nothing has changed. And again, I had a very successful business before. And so what I learned through in my previous career is like overnight success is a lie. Like, it doesn't exist. Not it's the exception that confirms the rule. Like every successful company has been at it for 10, 15, 20, 40 years. I mean, look at Apple. Apple today and Apple in early 2000 or end of the 90s. It's not the same company. If you look at their market cap, it's actually quite impressive to see the inflection point, and that Apple didn't have a great valuation not too long ago, and that the new Apple is really, started with the iPod, and then of course huge success with iPhone, etc., etc. So the Apple that we know today, we feel that it was the Apple that always existed, but it's not true. And so, companies take time to succeed. And so, for me, when I joined crypto, I knew I was coming in for the long run, and so I've been at it for almost 10 years now, 9. But it's a 10 to 20 years investment. Anything you invest in, takes 10 to 20 years to come to life. And so I'm not a trader either. Like, people should know that. Like, so I don't care about money too much. Like, I care about money to be, free and comfortable, but I don't care about money for the sake of money. I don't buy anything. I'm not a material person. I don't criticize people that like material things. I think it's great, but for me, I don't need money to buy anything. And so I'm only interested in building global and great businesses. And so that's my motivation. And the job will be done the day that the job is done. And right now, you can see that we're yet in a cycle. It's always very interesting to manage the company in a cycle down, from a management perspective. How do you manage a company, like, in these difficult moments? But there will be an upcycle, etc. And all of this will take time. And the next upcycle will be 2 to 3 years, and then you'll go down again, etc., etc. And so managing this is very interesting. I think it's the first time that you have to manage the growth of your company on a market that is growing and disappearing, and growing and disappearing, etc., etc. Like, it's very difficult. Like in advertising, for example, when you develop a business, the advertising market is a constant. And so you can see if you try to take 1% market share, 2, 3, etc., etc. And that depends on you, but the market is there. In crypto, the market is not necessarily always there, so you have to deal with that too, which makes running a crypto company really fascinating.
Pascal, such a great conversation. It's such an intriguing perspective, a different view than we typically get when we're talking to engineers. Really love this one. Great conversation, Pascal.
Thank you, Ash. Thank you for the feedback.
Thanks so much for your time. And now on to my interview on policy and regulation, which we recorded actually this past Tuesday. It's a great one as well. You won't want to miss it. Check it out. See you soon.